What's going on, everyone, and welcome back to another episode of Freshman Finance. I'm Patrick.
And my name is Basha, and today we're talking about how to pick the right broker.
Let's go. First, I think it's important to understand exactly what a broker is and what they do. So a broker is a middleman between you and the market. If you're looking to buy a product, they'll find someone in the market who's looking to sell. If you're looking to sell, they'll find someone in the market that's looking to buy.
If you're going to invest in the market, you're going to need to open up a broker account. But before we go any further, we strongly recommend that any brokerage account that you open up is FCA approved. If you choose an unauthorized broker, in the event that something goes wrong, you won't be covered.
This should be your first litmus test in choosing a broker. In the show notes, we'll post a link to the FCA register so you can find out if the broker you're looking to use is registered or not.
All right, so let's jump straight back into it.
Essentially, there are two main types of brokers: a full-service broker and a discount broker. The full-service broker has a wide range of services that they offer to you. Things like retirement planning, tax efficiencies, or stock picking, research and insights, and so forth. Now, as you would guess, this comes with a hefty price tag. This option could be right if you have a particular complex or complicated situation. It might be worth that fee. However, for most passive investors like ourselves, we don't really need to pay this hefty price tag. We prefer the discount broker. The discount broker doesn't offer you any of those services and actually forces you to do your own homework and make your own selections, thus coming at a lower fee.
Now, most financial advisors will recommend that you go with a full-service broker, especially as a beginner, because they'll tell you that the market is scary, it's complicated, and you need them to navigate it for you. The industry is set up this way so that, of course, they can make a profit off of you.
You finally found a broker on Wall Street that you can trust and who can consistently make you money. Sound fair enough?
You sound like a pretty sincere guy. Yeah, I gotta say I'm pretty impressed. But yeah, let's do it. Oh, yeah.
Now, paying these hefty prices to a full-service broker might not be the greatest idea, especially for a young person with a long-term investment horizon. It certainly didn't make any sense for us to do it, so we had opted for an online discount broker. Most of these online discount brokers offer you tons of tools and resources. Yes, you'll have to do the homework yourselves, but think of all the things you will learn, and all the money that you save you can put straight back into your investment account. Our goal is to get ourselves rich. It sure as hell is not getting someone else rich.
And the third thing that you really need to consider, which can have a massive impact on your wealth over time, is to make sure you understand the fees associated with the broker that you select.
Right, and when we first started doing our research, we were kind of shocked at some very creative ways that they've come up in order to charge you fees. So we're going to run through some of the most common and major fees that brokers charge.
Commission fees are very common. These occur anytime that you buy or sell a product in the market. The fee will depend on what brokerage you use, but also what asset class that you're buying or selling. It's important to understand what these fees are, and you can find them on the fact sheet or in the fee section of your brokerage account. If you're looking to actively trade, meaning you're constantly transacting in the market, keeping these commission fees low is going to be extremely key for you. If you're a passive investor like us, you want to make sure that you eliminate fees for buying and selling assets altogether. Some brokers will try and charge you a withdrawal fee, meaning a fee every time you want to bring the money from your brokerage account into your own bank account. Sometimes they'll even refuse to make that transfer if the money in your brokerage account falls below the minimum investment required. This is one to look out for and one you want to avoid at all costs.
So I'm going to run through some of the less common as well as potentially hidden fees that you might encounter. The first one is a deposit fee. So some brokers may charge you a fee to deposit your money into that brokerage account. Also, some online brokers can take ages to process the deposits. So when picking a broker, make sure to check if there's a deposit fee, as well as what the deposit transaction times are. Another one is a maintenance fee. Now these are becoming less and less common, and this is purely a fee to have an account with a broker. It can be charged on a monthly, quarterly, or even annual basis. And lastly, there's the inactivity fee. Again, less and less common, but there still are brokers out there who charge this. An inactivity fee is basically a fee charged if you do not conduct transactions within a set period of time. So, for example, say today you decided to buy 10 stocks and for the next 2 years you didn't conduct any transactions. If your broker had an inactivity fee, you would be getting charged over these 2 years that you didn't take any transactions. The way that brokers make money is predominantly off of commissions. So if you're not transacting, they're not making any money off of you. Therefore, that's why some brokers charge an inactivity fee.
As you can see, there are a number of different ways that a broker can charge you fees, and sometimes it can be really difficult to understand what you're actually going to be paying. For basically all brokerage firms, you'll be able to go to their fee section and actually really understand exactly what you're paying. If it seems overly complex and you really can't understand, this might be a red flag to move on to a different broker.
Another thing you want to consider is how you're going to be using your broker account. So what kind of assets are you going to be investing in? Are you going to be day trading FX currencies, investing in options, penny stocks, or maybe you're looking just to have a passive index-linked mutual fund? There are brokers out there that specialize in different areas of the market, so make sure you pick the right broker for you that offers you the asset classes you're interested in.
Now we're going to link below to a bunch of comparison websites, which is a great place to start to really find out which brokerage is the right fit for you. I think this is a good place to start, but it's not where it should end. I think you should go on to the account itself, play around with it, and make sure it's the right one for you.
Right, and most brokers will actually offer you a trial period, which means that you can open up a demo account, so a dummy account. And you can test it out, go onto their platform, execute a few fake deals, and then just trial it out, see if it works for you. Maybe you're looking to have a mobile friendly application, so that's something to consider. But also test out their client services, give them a ring, see how quickly they answer your questions or process your transactions. Ultimately, you're paying for this service, so why not test drive it?
Before we wrap up, we really want to quickly summarize how to select the best broker for you. Remember from the top, we really want to make sure that it's FCA authorized. This is the number one thing you want to look out for. The second thing that you want to make sure you decide on is whether you're more suited for a full service brokerage account or one of the discount brokerages out there.
And when you're doing your research, make sure you read through the fee section for the broker and really understand what you're going to be paying for. And lastly, don't be afraid to take advantage of a demo account. Even if you've narrowed it down to 3 or 4 brokers that you like, open up a demo account with all of them. This gives you a chance to test out their platform, see if it's easy to use, what kind of resources they offer, as well as to test out their client services.
And that's a wrap for today. Thank you so much for tuning in and watching us.
Don't forget to post your comments below, and we cannot wait to see you guys in the next video. Ciao!